All right, today we're cracking the code on a stock that seems to have completely defied gravity, Applied Digital. This company has seen its value just skyrocket, and in a really short amount of time. So what's really going on behind this meteoric rise? And more importantly, can it actually last? Let's dig into the data and see what we can find.
You know, when you see a stock take off like this, it's the million-dollar question, right? Are you looking at the opportunity of a lifetime, or is this just a bubble waiting to pop? That's exactly what we're going to tackle today, using Applied Digital as our case study. So let's get right to the numbers. On October 9th, Applied Digital, stock ticker APLD, it closed at $29.29. But look at the very next day. It jumped all the way up to almost $34. Wow! That is a huge leap in just 24 hours, and it really makes you ask, what is driving this insane momentum? So let's kick off our investigation with this parabolic jump itself. What does a move like this really mean when you see it on the chart? And more importantly, what can it tell us about the forces that are at play here? Get a load of this number. Over 108 million shares were traded in one single day. Now, that's not just a few small-time investors making some moves. Oh, no. This is a sign of huge institutional interest, and it's a massive indicator of just how powerful this stock's momentum really is. Now, nobody's denying the upward trend here. It is extremely strong. But this latest surge, it's a total statistical outlier. The price has shot up 31% beyond its predicted value. It's kind of like a marathon runner suddenly breaking into a full-on sprint and leaving the rest of the pack in the dust. And that is our first major clue that we need to dig a lot deeper. Okay, so now it's time to pull back a bit, zoom out, and look at the bigger picture. To really get a handle on this sudden jump, we have to see how it fits into the stock's longer-term story. It's time to follow the money. And to do that, we're going to use a fantastic tool called the moving average. The best way to think about it is that it smooths out all the daily bumps and wiggles, all that market turbulence, to show you the true direction the stock's been heading over time. It's like seeing its long-term flight path. And wow, just look at this table. The current price of nearly $34 isn't just a little higher than its averages, it has completely left them in the dust. It's nearly double the 50-day average and more than triple the 200-day. This tells us loud and clear that this recent surge isn't just a blip, it's a massive departure from the norm. All right, time to pull out our forensic toolkit. We need to look closer at the sheer force behind this surge. It's not enough to know the direction of the trend. We've got to understand the speed of its ascent. But here's the thing. How can we tell if a rally has gone too far, too fast? I mean, is there some kind of gauge to measure when a stock is just overheated and might be due for a cool down? Well, yes, there is. One of our best tools is the Relative Strength Index, or RSI for short. Think of it like a speedometer for the stock. It tells us how fast the price is moving, and crucially, if it's been moving too fast for too long, a pretty good sign that the rally might be running out of gas. So the RSI works on a simple scale from 0 to 100. As you can see here, anything below 30 is considered oversold, meaning it might be due for a bounce. But the one we care about today is on the other end. Anything above 70 is a big red flag. It signals that the stock is overbought and could be headed for a pullback. So what's APLD's score right now? A whopping 86. Yep, that is way, way into that overbought territory. This is a huge piece of the puzzle, and it strongly suggests this rally might not be sustainable. To put it another way, the data is basically telling us that this stock is like a sprinter who's been running at top speed for way too long. At some point, you just have to catch your breath, right? And that could mean a period of cooling off, or even a pullback is right around the corner. And it's not just the RSI that's flashing these warning signs. We've got other technical indicators all telling us pretty much the same story. The MACD, the Bollinger Bands, the CCI, they all point to a stock that's in a period of extreme momentum and buying pressure. And that often comes right before some kind of reversal. Okay, this brings us to what I like to call the price battleground. These are the critical price levels we have to watch. These are the zones where the fight between the buyers and the sellers is going to be the most intense, and where the stock's next big move could be decided. So here are the key levels you'll want to keep an eye on. Think of them like a ceiling and a floor for the price. The resistance, or the ceiling, is up around $39. The support, or the floor, is down around $29. Right now, the stock is trading right in the middle of that range, and a break above that ceiling or below that floor could tell us everything about where it's headed next.
So, we've gathered all the clues, we've analyzed the data. What does it all mean for the future of APLD? Well, based on everything we've seen, there are really two main scenarios that could play out from here. Okay, scenario one, the bullish case. The incredible momentum just keeps on rolling and the stock smashes right through that $39 resistance level. But then there's scenario two, the bearish case. All those overbought signals finally kick in, triggering a pullback that sends the stock back down to find support on that $29 floor. So, what's the bottom line here? What's the verdict? Well, while the long-term trend for this stock is really strong, the short-term indicators are screaming that a period of consolidation is very likely. This could mean the stock just trades sideways for a bit, or maybe even pulls back to a lower price, before it even thinks about continuing its climb.
If there's one number to take away from all of this, it's this one, $29.246. That is the critical support level. As long as the stock can stay above that floor, the long-term uptrend is probably safe. But if it breaks below that level, well, that could signal a much deeper correction is on its way.
So there you have it. The evidence is in. What we have here is an unstoppable trend that has slammed right into an immovable risk. The big question is, which one is going to win? Thanks for digging into the data with us.